So you're thinking about buying a house here in the Phoenix, Arizona market, and you see something come across the internet that says, no closing cost mortgage. Pops right up, you see it, sounds amazing, right? But let's get real, nothing is free and those costs don't just disappear. Here's the truth that you need to know before you sign on the dotted line. Hi everyone, I'm Katie Evans, aka the Real Estate Boss Mom, and today we are breaking down the no closing cost mortgage, what they actually mean, how they actually work, and whether they make sense for your situation here in Arizona. All right, first let's talk about the basics a little bit. What are closing costs? Closing costs are actually fees that you pay to finalize your home purchase. They are things like loan origination costs, appraisals, title insurance, escrow fees, taxes, and maybe even more. Things like maybe home HOA fees. So here in Arizona, that number typically ranges between 2 and 5% of the purchase price. So on a $400,000 home, that would be around 8 to 20 grand. So how does a no closing cost mortgage actually erase those fees, you might be asking? Well, it's simple. It doesn't. The lender either bumps up your interest rate so they earn it back over time, or they roll these costs into your loan so that you're actually paying interest on them for years. So why would you actually choose this as an option for yourself? Great question. Sometimes this actually does make sense. So if you're short on cash at closing, or you know you're going to only be in the home for a few years before you sell it, or you're going to be refinancing into a different kind of loan program, it could be a smart strategy for you, but those are always variables. It does keep more money in your pocket up front if that is actually the case. But let's be clear, there are absolutely some trade-offs for this. You will pay more in the long run on this loan if you hold the loan for a long period of time. A higher rate, a bigger loan balance, it doesn't matter which, it both mean that you are going to spend potentially thousands extra if you stay in the home long term, okay? It's not free, it's a trade-off. So this is where the strategy comes in. If you are a first-time home buyer here in the Phoenix, Arizona metro market who needs cash for furniture, moving, or like an emergency cushion, maybe this is a good strategy for you. But if this is your forever home and you want to minimize the cost over the decades that you're going to be paying it off, paying the closing costs up front is way more of a smart move, all right? So I'm not saying that no closing cost mortgages are bad. They just require understanding the math and the long-term impact. Don't get distracted by the shiny object. Sit down with your trusted lender, an experienced agent like myself, and let's make sure that we're making a financial plan that is in your best interest and actually serves your goals. So if you are thinking about buying a home here in the greater Phoenix market, let's talk strategy. I'll connect you with great local lenders who understand and can listen and help you decide what is the best program and experience for you and help you make the smartest decision for your future. Thanks so much for watching this video. As always, if you haven't, please take an opportunity to like our video. Give us a comment below. If you're following us on YouTube, please subscribe to our channel and click that bell so that you get notified whenever we launch a new video. Thanks for watching. We'll catch you on our next one.